In this video, I'll analyze the Q1 FY26 result and Concall of Yatharth Hospital. So let's start with the company overview. So Yatharth is a multi-speciality hospital chain mainly present in Delhi NCR region. In total, they have 5 hospitals as of Q1 FY26, and in this quarter Q2 FY26 they have added 1 hospital in Delhi, and in this quarter they will open another hospital in Faridabad. So in terms of their specialty, they are specialized in neuroscience, oncology, cardiology. So that is the company overview. So let's talk about the Q1 FY26 result. So in this quarter they grew their revenue by 22% year on year, and if we look at their past, they were growing at a rate of 30% for last 3-4 quarters. So the question is, has the revenue growth slowed down? The answer is no. But why? So if we look at their capacity expansion, last they added a capacity in the quarter of Q1 FY25. In that quarter they added 200 beds. So that is one point. And if we look at the quarter of Q2 FY25, Q3 to FY25 and Q4 FY25, year on year, this quarter had a capacity expansion year on year. Okay, so that is one point, that in the last 3 quarters there was a capacity expansion year on year basis. Okay, so that is one point. But if you look at Q1 FY26, they had not added any bed year on year level, because they already added in the Q1 FY25. So that is one point, and that is why the incremental growth had been missing in this quarter. Incremental growth means what? It is the capacity expansion I am talking about. The incremental growth has been missing in this quarter of Q1 FY26, and that is why the revenue growth was little bit low. But as I said, that they have opened another hospital in Delhi, and they will open another one hospital in Faridabad. So the capacity expansion will happen in the Q2. So after Q2 we can expect a better kind of a revenue growth. Like obviously in Q2 the revenue growth, we can expect a revenue growth of like 2022, like what happened in the Q1 FY26. But after Q3, Q4, Q1 FY26, we can again expect a better kind of a revenue growth going forward. Okay, so that is the point, and that is why I always say one thing, that business is not about just one line item. It is not about just revenue growth. In a business, there are multiple line items involved. Like in a hospital business, what are these line items? One is occupancy, one is ARPOB, one is the capacity expansion, the bed expansion. So these are the main 3 line items in a hospital business. And if we look at these 3 line items for Yatharth, if we look at the occupancy, in this quarter, if we look at their occupancy, they are at a range of 65%. Okay, and if we look at the Q1 FY25 occupancy level, they were at a level of 61%. So they increased occupancy 4% year on year, and also if we look at the Q4 FY25, they also increased the occupancy level by 4%. So year on year and quarter on quarter, both they increased their occupancy by 4% to 65%. Okay, so that is one point. Occupancy really good. They improved their occupancy in Q1 FY26. And if we look at their Jhansi Orcha hospital, in the last year Q1 FY25, the occupancy level was at 45%, whereas in this quarter the occupancy level was at in the Q1 FY26, the occupancy level of Jhansi Orcha was at 59%. So they improved occupancy level in that hospital by 14%. And also, if we look at the newest hospital, Greater Faridabad, they increased the occupancy level from 10% to 55% in this quarter. So that is the thing I am talking about. They are consistently increasing the occupancy level. Overall, as I said, they improved their occupancy level by 4% year on year and quarter on quarter basis. So that is the occupancy level. In terms of ARPOB, average revenue per occupied bed, if we look at the ARPOB also, in this quarter they grew their ARPOB by 6%. So in terms of ARPOB also, they are doing good. Okay, and they are expecting a ARPOB growth of 8 to 10% because ARPOB is a kind of a inflation. So that is why they are expecting a 8 to 10% increase in the ARPOB going forward. So in terms of ARPOB also, all is fine. In terms of the capacity expansion, as I said that they already have opened one hospital in Delhi, 300 bedded hospital, and then they will again open another 400 bedded hospital in Faridabad. So by the end of Q2 FY26, they are going to have around 2,300 bed overall, and going forward after this two expansion, again by FY28 they are planning to increase the bed number of bed to around 3,500. So at the end of the Q2 FY26, they will be at a level of 2,300 bed. Going forward, in the over next 3 years, they will increase this number of beds to 3,500 bed. So this translates around 33% CAGR rate, which is a very good kind of a rate. So in terms of the capacity expansion also, they are doing really good. So that is what I am trying to say. It is not about just one line item. The revenue is the revenue in the hospital sector is the byproduct of the occupancy level, the ARPOB level, and the capacity expansion. So revenue is the byproduct of these 3 line items. Okay, so that is the point. If these 3 line items are going in a right direction, are increasing consistently, then obviously revenue is going to improve, the growth will be there. So that is the point I am trying to say. So in terms of the revenue also, we can expect a revenue growth of 35-36% going forward in next 6, 7, 8 quarter, because their capacity, if we look at their capacity expansion, that will happen in a rate of 30% CAGR, and ARPOB will improve by 6, 7, 8% we can expect. So obviously if we calculate, it comes around 30-35% of growth engine going forward in the next 3-4 years. So that is one point with the Yatharth, and that is a really good point. So that is the point. In terms of the OPD volume, if we look at the OPD volume also in this quarter improved by grew by 21% year on year, which is a very good rate. IPD volume also grew by 27% in this quarter. IPD means the overnight stays. So 27% increase in IPD volume, which is a very, very good thing. And OPD volume also 21% is very good. So in terms of all the parameters, I can say the hospital is moving in the right direction. In terms of the occupancy, in terms of the ARPOB, obviously ARPOB is going to increase. There is no difference with any other hospital, but occupancy level, they are improving, they have been improving. Okay, so in terms of occupancy level, no problem. In terms of the capacity expansion, they are growing at a very high pace, so that is another thing. So no problem with the revenue. I do not see any kind of problem there with the revenue growth coming in the coming quarters. So that is the point. And let's talk about the two new hospital, one in Delhi, one in Faridabad. In the Delhi hospital, that is a 300 bedded hospital, and Faridabad is a 400 bedded hospital. In terms of the occupancy, the management is expecting occupancy level at 30-35% by Q2 FY27. Okay, so occupancy level wise, this is the expectation of the management. In terms of the ARPOB, the company overall company level, the ARPOB is at 32,000 rupees. Okay, and the company management is expecting a 38,000 ARPOB from these two hospitals. Okay, so newer hospital is going to have a better ARPOB and it will help the overall level. So that is another good point. In terms of the profitability, the Greater Faridabad is profitable, become profitable in just 1 year. That is an amazing thing if you look at, because PAT level profitable is very hard in the hospital business because of the depreciation cost, because of the high capex, and the PAT level profitability is very hard, and they achieved that in just 1 year, which is like absolutely amazing. So Greater Faridabad level that they opened in the Q1 FY25 already is profitable at a PAT level. So that is a very good thing. And in terms of the Delhi and Faridabad the new hospital in Faridabad is going to be profitable by 15 months. So that is the expectation of the management. Okay, so in terms of the two hospital, the management is very positive about these two hospital. In terms of the EBITDA margin, company level EBITDA margin, in this quarter the EBITDA margin is flat year on year, and quarter on quarter also flat. Okay, and if we look at their last few quarters, they have been in the range of 25-26%. Okay, so in terms of the EBITDA margin, that is very stable in the last 2 years, so no problem about that also. And going forward, the management is expecting a EBITDA margin of 24-26% in FY26, and going forward also I think the EBITDA margin will be in the range of 24-27%. So in terms of the margin also, that is, there is no problem with that. In terms of the PAT level, if we look at the PAT in this quarter grew by 40%, but we can't expect a very high PAT growth coming forward. Going forward. Why? Because they inaugurated one hospital. They have inaugurated one hospital in Delhi, and they will open another one hospital. So the capex will be high going forward in this year. So obviously hospital is a capex intensive sector industry, so the depreciation also is high in the hospital industry. So that is why going forward we can't expect a very high growth in terms of the PAT level. Okay, because of the depreciation cost they have to take. So that is the point with the PAT. So I do not expect a very good kind of a PAT growth going forward because of these two hospital. Because if we look at the hospital industry, if we look at the Yatharth, capex per bed is around 1 crore. Okay, so that is what I am trying to say, so in this quarter they will add another 700 bed, so it will cost them around what, around 900 crore. Okay, so that is what I am trying to say, that going forward this capex will cost them the depreciation. Okay, so that is the point with the PAT growth. So PAT margin, we can expect a very good kind of a PAT margin, but once the hospital become mature, once the hospital becomes mature, then we can expect a PAT margin expansion. Okay, but when a hospital is growing at a high pace, doing capex at a high pace, we can expect a very good kind of a PAT margin improvement. Okay, so that is the point, and that is why if we look at the valuations, always we value hospital by EV to EBITDA. Okay, not P ratio, because in the EBITDA level, in the EBITDA there is no depreciation cost. So in the EBITDA there is just the operation cost. EBITDA gives a picture of the operational costs. Okay, operational profits. So that is the point. That is why we always calculate, we always value hospital by EV to EBITDA, not PE, because obviously if a hospital is growing at a high pace, obviously their earnings will be lesser because of the depreciation cost. So that is why. And if we look at the Yatharth is trading at a level of 28 EV to EBITDA, whereas Max is trading at a level of 61x EV to EBITDA. In terms of the Apollo is also trading at a level of 36x EV to EBITDA. So still I will say that Yatharth is trading at a very comfortable range. But if we look at the whole result of Yatharth, absolutely I will say absolutely very very good result, because in spite of like there was no capex, there was no addition of capacity year on year level, they have been able to grow their revenue by 22%, which is a very good kind of a rate, mainly driven by the occupancy level and the ARPOB. Okay, so that is a very good point with Yatharth, and going forward when there will be the capacity in place, okay, we can expect a better revenue growth obviously. But in Q2 I am not expecting a very good kind of a revenue growth, because Delhi hospital just have operationalized, so we can't expect a very huge kind of a revenue contribution from Delhi or even Faridabad. But after Q4 we can expect a good kind of a revenue contribution from these two hospitals. In terms of the capex also, no problem about that. They are planning to do very good kind of a capex in next 3 years. So overall level, very good hospital, very good company, and the results are very very interesting, very good. So overall they are doing really good. I do not have any kind of a problem with the result. In all the parameters are really good. So that is the point with the Yatharth. And in terms of the valuation also, I think they are trading at a very good kind of a very comfortable kind of a valuation. So that's it for the video. Thanks for watching.